Balance sheets. What are they? Why do American balance sheets look different to European balance sheets? Are they really different? This video will give you a simplified view of what's in a balance sheet. We will see how an individual balance sheet is just the same as a corporate balance sheet. Let's get started. Felicity is a young professional lady. She owns a one-bedroom apartment in a nice neighbourhood. Felicity borrowed money from the bank to finance the purchase of her apartment. All she had to start with was a deposit. Felicity recently treated herself to a car in her favourite colour, yellow. She largely financed this with money from the bank, specialising in car finance. So let's look at Felicity's personal balance sheet. Her apartment is worth $100,000, but she has a mortgage of $80,000. Her car is worth $10,000, but she still owes $7,000 to the car finance bank. This shows that Felicity's total fixed assets is $110,000 and her total debts are $87,000. Felicity also has $5,500 cash in her bank. This is known as a current asset because this figure is constantly changing and cannot be called fixed. The total assets less total liabilities equals Felicity's equity. As you can see, the total assets equal the total liabilities and equity. That is why this statement is called a balance sheet. Balance sheets do, however, split the creditors between long-term creditors that are due in more than 1 year and short-term creditors that are due within 1 year. As you can see, the creditors only expect Felicity to pay off $4,000 in the next year. This style of balance sheet is used in the USA and is called a horizontal style, where all the assets are on the left-hand side and all the liabilities and equity are on the right-hand side. To get to the European style or a vertical style balance sheet is simply rejigging the same figures. The fixed assets are just the same, but they come at the top of the sheet, centre right. Next comes the current assets, which are the same number. Next comes the short-term creditors or current liabilities. This time it is shown as negative numbers. This has the advantage of instantly showing the working capital or the ability to pay your way in the short term. The next subtotal is total net assets. After that, we take off the long-term loans and commitments. This gives us the true worth of the balance sheet, which equals the equity. To remind you, this was Felicity's balance sheet in the horizontal style with her equity being $28,500. And this is Felicity's balance sheet in the vertical style with the same $28,500 equity. Now we understand how a personal balance sheet works. How different is a company balance sheet? You would be surprised just how similar they are. In essence, they are the same style. In fixed assets, we also have the same land and buildings as Felicity, but we also have investments and subsidiaries and, when appropriate, patents and trademarks. Also, companies often have plant and machinery to meet their needs. Other fixed assets include furniture and fittings, vehicles and computers. The last 4 items are depreciated. Their value is lowered every year. In addition to cash, the current assets will often have stock and work in progress, accounts receivable, that is money owed to the company from customers, and other items such as prepaid insurance. Current liabilities are things that the company is due to pay in the short term, such as accounts payable and invoices from suppliers, bank overdraft and short-term loans, tax and any other short-term liability. Loans that are due after 1 year are in this section. Now, Felicity's equity was the difference between total assets and total liabilities. Although this is also true of the company, the equity is made up of share capital and retained profits. As you can see, if you understand Felicity's balance sheet, you can also understand a company balance sheet, because they're practically the same thing. Now you've seen the whole video, please review the video for a second time.